Hello, everybody. Welcome to the webinar. We'll get started at this time. My name is Troy. I'm a senior account manager with AvaTrade. I'll be leading the session. As we get going, let's just do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Hello, Siawash. It's good to have you here from Sweden. We'll be getting going here just a little bit. Okay, I've got enough responses. Looks like we're up and running just fine. Thank you very much. Okay, so some fundamental news certainly happening today that and really over the weekend that helped drive the movement of some different assets. And we'll take a quick look at the fundamental news situation and then jump into the technical analysis on the charts and try and pick some spots and some strategy concepts that might make sense to you as we go along. Keep in mind that all investments have risk. This is true really whether you're investing in real estate or investing in FX trading, spread betting, options. No one trade is guaranteed to have profit. You certainly should manage your risk in a way that makes sense, whether that's using stop losses, hedge positions. We even have a feature called AvaProtect on the AvaGo app. That's a special feature for managing risk on gold and silver and FX pairings. So you've got some options in terms of how you manage risk. There certainly is the potential for nice profits as well, which is why we're all here, to hopefully from an educational perspective, put together some ideas, some tools that will assist you in hopefully improving upon your P&L at the end of the day, end of the week, end of the month, etc. And just make sure you're not taking anything as financial advisement. That's not the intention of what we're going over today. So when we talk about technical analysis, there's two main ways to go about using technical analysis that we could get into. In general, what is technical analysis? It's looking back at the historical data on the charts and looking for maybe repetitive patterns, price levels that might look like they mean something in terms of historical movements, trying to find a way to predict the future potentially based on the past. And while technical analysis certainly can be very helpful, the history is no guarantee of what will happen in the future, obviously. But what we're doing is trying to find some sort of advantage by studying the history to hopefully improve upon our win percentage or our profitability as we move forward. And many traders find a great bit of success, even trading just with technical analysis without even looking at the fundamental news. And we'll talk about some concepts with that as we get on the charts as well. Now, I alluded to the fact that there are two main types of technical analysis. You might say manual methods of technical analysis is one type. That would be drawing your own lines, finding your own price levels, finding where it's trending, ranging, etc., and picking your spots. And that's tend to what we lean towards more in the webinars that I carry out is more of the manual methods because it involves actually learning what's going on, what you're doing, understanding the steps that you're taking, rather than just blindly relying on an indicator to tell you if something's overbought or oversold, etc. Now, indicators would be the other way of using technical analysis where the indicator is reading the technical analysis. It's reading the historical data and giving you some sort of graphical information about when to buy or sell potentially. Now, indicators can be very useful. I think they're most useful when using them to confirm what you've read yourself to be true on the charts as a confirmatory type of thing. Some use them more blindly, but understand that an indicator doesn't necessarily know what's going on fundamentally. It can't recognize that maybe in one direction the signals will be great, and in the opposite direction they could be wrong all day long. And many times you can see this occur with indicators. If you're not combining the technical analysis, the indicator signals, with at least some fundamental understanding of what's happening in the news, because movements could just run one way all day long, and each indicator is going to keep telling you after it runs in one direction for so long that it should come back the other way, and it doesn't necessarily have to do that each day. Indicators tend to be very good when the markets are ranging, meaning going up, back down, in a repetitive fashion in a limited range. Then when the indicators say overbought, it tends to drop back down. When the indicators say oversold, the price tends to go back up when it's ranging. When it's trending, meaning running in one direction for the most part throughout a day or a week even or longer, then many times indicators are only good in one direction and not the other. Okay, and so by understanding price levels, manual methods of technical analysis, you can really start to understand how to better use the indicators as well, which certainly can be helpful, if for nothing else, to confirm what maybe you've already figured out on the charts yourself. Okay, so as we go along, please ask questions if you have any, give input, suggestions if you have any. I'm happy to share information as we go along as well. Okay, so let's go ahead and take a look at a little bit of fundamental news that's been happening today, and then we can move on to the charts on my demo account. And so I mentioned when we were looking at the risks, Lindiwe, I'm not sure what you mean by unable to connect. Maybe you're saying you can't see my screen? You have to elaborate a little bit more. Okay, so I alluded to the fact that there are different ways to manage your risk. And I mentioned something called AvaTrade Go, our mobile app, which is found under the trading platforms here. AvaTrade Go, that's a mobile app that will work on most all mobile devices. And you'll find it in the Google Play Store, the Apple App Store. And a feature I mentioned that's on the AvaGo app is called AvaProtect. And what that does for the assets that it's offered on, FX, gold, silver, and maybe other assets eventually, it allows you to choose a time period, 1 day, 2 days, 4 hours, whatever's available in the time period selection. And for a premium cost, which is paid up front, it's a flat cost once you've enacted the trade, it covers you against any and all losses during the covered time period. Okay, so in this example, it's covered for 1 day in the setup. If the person placed this trade and it by some chance went flying the wrong way, I don't care if it was 500 pips, whatever amount it went the wrong way in the covered time period, when that coverage period ends, any negative floating would be added back to the account and the trade would keep running. Could manage the trade then with a stop loss or something else once the coverage period ended. Okay, or you could choose to close it during the coverage period and cash in any negative floating payment from the coverage if you were giving up on the movement going the right direction. So it's a nice feature. If the movement goes the right way, which is obviously your hope, then you only have that small cost for the protection and all the profits are yours. Okay, so it's a nice feature. Can we look at what's affecting the US stocks today, especially the NASDAQ? Yes, we'll do that, Emilio. And I don't know if that was a Freudian slip, but you said, can we loot at what's affecting the US stocks? And certainly that's an appropriate slip up. Instead of typing look, you typed loot. There's a lot of looting going on in the US these past nights and days. So that's a nice Freudian slip there to type the word loot instead of look, unless you purposely did that. And so there's a lot of tension going on, certainly in the US and other tensions around the world as well that we'll take a look at. So, okay, let's take a look then. The main headlines you see, it's easy to read the fundamental news real quick before you get into your technical analysis, which might help you pick a preferred direction that you'd rather trade with your technical entry points. You might have a preference of where you would prefer to find entry points. And so Wall Street flat as recovery hopes offset US protests. Okay, so the US protests are in the news. What are these protests about? Tragically, a person was killed with what looks to be an overzealous police officer. I shouldn't say police officers. And no matter what led up to the person, having been in the process of being arrested, it didn't look good with the way the police handled it through the end of the event that was shown on TV. And so there are a lot of protests going on. A lot of folks are angry that maybe the police are being a bit too rough, and so, or a lot too rough, if in this case, as the person was killed. I guess we're still waiting on the final autopsy results on that. And did he die because of the neck being pushed on, or was it something else? But people are assuming it was because of the police actions. But so that's what they're talking about here, the US protests, and it certainly has got the volatility index up above. You look at the S&P 500 VIX index, it's up above 3%. It's been in the green all day long. And if you look at the volatility index being in the green, that means fear is up, because that's what it's measuring. Usually when you see that, the futures and the markets are red. Only in this case, everything's green, including everything's up, including fear. So that's why this headline is telling you Wall Street's flat or even slightly in the green because of hopes of a recovery of the economies, even though there's tension with these US protests. And they're not just protests, they're riots. They're major cities all across the US have curfews now. Businesses that were trying to open up after the pandemic now have been, many of them, destroyed, looted, burned, and just some craziness going on. So even with that going on and some tensions between US and China stirring up again, the markets are still slightly green. This just tells you that investors are really anxious for a recovery, because even with a lot of tensions going on and with fear is up, the markets are still green today, slightly green, but green. Okay. We could take a look at the EURUSD, Charles. If we've got some time, we'll pull that up. So we get the idea here: mixed news, some fear, and also some hope for recovery in terms of investors and especially the equities. And so here's a headline: world equities edge higher. By equities, by the way, if you don't know what that means, we're talking about the stocks, the indices, okay, for the most part. So world equities edge higher despite US-China tensions. So we know there was tensions with the riots and the protests in the US, and some of those protests actually carried over to the UK and other places around the world, amazingly, in response to what's going on in the US. But also then there's some tensions between US and China. And, the US administration is not happy still with China, and they're letting it be known. And this is putting some of the even trade deal stuff that was already passed before this pandemic hit between the US and China. It's putting some of that in doubt. So that's creating some fear on the markets. And that can be a really big deal. I mean, here's another headline: China halts some US agricultural purchases, because US is saying that they don't like what's going on with China and Hong Kong. And so that whole situation could blow up in terms of the trade deal, maybe one side reneging on it. And it looks like a little bit of that has already started, with China halting some of the agricultural purchases, maybe that they promised they would purchase. So stay tuned for those headlines that could break at any moment, either worse or better. And looks like it's leaning towards worse. What happened with regularly scheduled economic announcements? Actually a little better than expected. And that's really what's driving the optimism today. Look out of the European Union. Spanish PMI numbers better than expected. Italian PMI numbers better than expected. French manufacturing PMI numbers better than expected. The Germans numbers weren't better than expected, but almost at expectation and higher than the last numbers. And as we go down, we look at other numbers. The ISM manufacturing PMI out of the US, better than expected. Okay, manufacturing prices better than expected out of the US. So good numbers coming out of the European Union. Well, I shouldn't say good, but better than expected, showing at least improvement coming out of the pandemic. Out of the European Union, several different nations, better than expected numbers out of the US as well. And so this is what they mean by these headlines. Hopes offset the protests and China tensions. Hopes for a recovery because some of those numbers really are looking better than expected, okay? Not just in the US. We can take a look at some metals. No, we're not specifically focusing on metals, but we could take a look at some metals. Maybe we'll take a look at gold or another. Okay, so you get the idea here. We've got some mixed news, but we've got equities edging higher. We've got some tension between China. We've got better than expected PMI and factory numbers coming out. Construction spending in the US falls less than expected. So although construction spending fell, it fell less than expected. So again, a little bit better news than expected. Okay, these are the things that they're talking about. Optimism is outweighing right now the fear that's on the market with the China-US thing and with the riots in the US, etc. So that's why we have a somewhat rare situation where fear is up all day. It's been rising on the VIX index, but the futures were green pretty much all day, and now the markets when the US opened are also green. Okay, without these fears with US-China, if they weren't bickering, the markets would probably be rushing up drastically today. The fact that they can rise even with these fears going on. Okay, so an interesting day in terms of the fundamental outlook. And so let's take a look. Let's go ahead on, we'll jump on my demo here. I've got Tesla up for a reason. Does anyone know why Tesla might have taken such a climb in the past? Look at it. Look how Tesla jumped after the weekend. What happened over the weekend that has something to do with Tesla? Yeah, the space shuttle, right? SpaceX, exactly. So they had a successful launch with 2 astronauts on board. It wasn't just a test launch this time. Well, it was somewhat of a test launch, but with a manned test launch. They built it in a much safer way compared to the last shuttles that the US used to use. They actually had several levels where they could bail out, and the astronauts could bail out of the craft or out of the flight and come back down and be okay. It wasn't like this all or nothing thing that it seemed to be in the past, where if the space shuttle had a problem, the astronauts were doomed. So the safety features are much better on the new SpaceX shuttle that they're using. And Tesla obviously is involved with that. Okay, they're the leaders with SpaceX. They're the developers. And so Tesla jumped because it was a successful launch. The astronauts have already linked with the International Space Station and gone on board there. So there's a lot of excitement surrounding that and what that means for Tesla as well. Okay, they're looking at space tourism, all kinds of stuff moving forward, and they're doing these launches a lot cheaper than the government in the U.S. ever did. So that's what happens when you involve private enterprise with the government to get stuff done. It wasn't all government run like in the past, and it seems to be a heck of a lot more efficient now. So we've got then this jump in Tesla, and you could say, well, maybe I should short it. Maybe you could short it, but that's a strong momentum as well. We could take a look at the bigger picture on one-day candles and say, wow, if I'm looking at what's the potential for the climb here, I see a resistance level up here. Okay, resistance, tested and back down, resistance, tested and back down, and this is back into January. Okay, twice it tested this level and came back down. Now, and that was, partially with the pandemic as well, why this crash occurred all the way down. Now look at this recovery, up, 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 and it just broke this resistance right here. Okay, this was a resistance level on the one-day candles here that pulled back down, and it broke through today. That gap and the run up today broke this resistance level. Okay, so if I then say, okay, this is a new support level, then if the old resistance is broken, typically the old resistance becomes new support according to support and resistance theory. So if this resistance was broken, which it was today, then we go and we look back and we say, okay, 1 hour candles, here's my new support level right here, somewhere in this area. So if you're hoping for a pullback and then you'd like to buy on this, that might be a spot where it could pull back to. Okay, you could put a pending buy limit somewhere around this support level. And then certainly if your stop loss was below this gap, right? If your stop loss was below the gap, it would have to be some really negative news for Tesla to retrace this entire gap to hit Friday's price, where it closed on Friday here. So a stop loss down there seems to be pretty safe unless there's some huge news that goes against Tesla. Okay, that's if you're looking to go long on Tesla. Now you also could say, well, I don't think it'll pull back, I'll go long now. That's your individual choice as well. Certainly the momentum's up. The fundamental news for Tesla explains the climb, and the ability for this to trace back through this gap probably would be pretty tough, barring some really bad breaking news for Tesla. Okay, and so this distance back down from 867 to 829, then or if you go from the current price to 829, all right, risking 30, 40, 50 dollars per share. And the one-day candles, though, look at the potential profit to the one-day candles. When I switch to one-day candles, even to get your stop loss all the way below Friday's close, to really have a strong stop loss distance, look at the distance to the take profit if it goes to this resistance level. It's still twice the distance up as it is risk to the stop loss down here, the potential stop loss location. Okay, it's a larger potential profit to that resistance level and compared to what you're risking here. Okay, and so that type of setup would be more of a longer term move. You can be patient with it. If it pulls back some, it would have to retrace that entire gap. It kind of serves as a buffer, a safe zone to try and stop any reversal if it tries to get to that gap. With that launch news, that's pretty positive news for Tesla. That gap from Friday's close to today's open could be a pretty substantial thing that could hold. Any comments, questions on that? Just a bit of technical analysis along with that fundamental news. We see the resistance level, we see the gap and the momentum. You could pick your spot. You see it's climbing more now as we're speaking. So if you were one that took the mode that I would just take a market buy, I wouldn't wait for a pullback because it might not pull back with the type of momentum it has. It's been climbing while I'm talking. You might already be in profit in the short term anyways. So it looks nice. Give me an okay if everyone's hearing me clearly. I want to make sure because I'm not getting a lot of responses back. Okay, good. Thank you. So we're moving on to another asset. Not too complex with what we looked at there. Maybe we'll look at the S&P 500, some of the major indices. Again, we see the uptrend. Very easy to read. The headlines all day today were that the positive momentum was overcoming the fear. And all day, for the most part, the futures were green, even though fear was up. So you can see that something was different today, because usually you do that quick look at the volatility index and the futures, and usually they're opposite of each other. If the volatility index is up, usually futures are red through the day. If volatility index is down, usually futures are green during the day. Today they were both green, and the headlines explained it. They told you the positive momentum was overcoming the fear on the markets, and we saw it all day, confirmation of it. Okay, and look what happened if we zoom in. What do we call this here at market open? This was Friday's close, and the market opened down here. What do we call that? Space in the price. From Friday's close to Sunday night's open, there's a space here in the price. There's no candle there. It's a gap, exactly. What happens many times after a gap occurs? If the movement starts to re-enter the gap, what happens many times with that gap? Yeah, it gets filled. Okay, it took a little while to re-enter the gap, but once it re-entered the gap, it entirely filled the gap. And let me show you. So the price gap down, it continued to fall with that momentum. You certainly could have traded down in the direction of the movement because it entered a downtrend immediately. If we looked at 5-minute candles, you'd see this was downtrending. Okay, and when it reached that first support level right here, okay, support from Friday, once it reached that support level, it stopped dropping. So if you were going with the direction that it gapped, fine, you could have profited on that. If you also could have programmed a pending order up here, okay? If it went above the open price here, which is the top of the red, it opened at the top of the red, pulled up a little, and down like a rock. So once it came up and re-entered the gap here, the technical strategy is trade until it fills the gap, okay? Which it did here. Okay, right here, it had refilled almost the entire gap. Okay, re-entered the gap here. If you had by the way, what kind of pending order could you have up here? So if it re-entered the gap, it buys for you. Yeah, exactly, a buy stop. Very simple. You see it down here, you see it trying to climb towards the gap. And so you just put a buy stop pending order up here. Once it breaks back into the gap, boom, it buys for you. And there it went. It filled nearly the entire gap in the first try. And then now it just refilled the entire gap again. Okay. Very simple strategy. Now the question is it going to break above Friday's high? Okay. It's almost there. Right now, in fact, it's at Friday's high. Okay, you can see it there. Some might say it's time to sell. It refilled the whole gap. We just watched it fill the gap. It just completed it. So if we go to 5-minute candles, you're likely to see, here's the line. This red line is the gap, the top of the gap that I drew right here. Okay, if we go back to 1-hour candles, there's the line I drew, this red line. That's Friday's close right up here. This was today's open down here. So it's filled the entire gap. You had 2 shots, by the way, to trade that strategy today to fill the gap. It did it twice. Now it's at the top. So I see an opportunity here potentially. And there are a couple different ways you can go about it. One is it's about to touch that gap, or it's darn close to doing it, right? So you might wait and see if you see a reversal on the 1-minute candles. If it starts to downtrend, you see a downtrend, maybe you trade for it to retrace back down to today's open. Okay. Others would say, I don't need to see the reversal. I'll just trade now. That's up to each individual trader, right? I tend to like to see that the momentum has died a bit before I assume there's a reversal. I don't mind if I miss that first spike down, like it's spiking down right now. I like to see, and let me show you. You've got higher high points still and higher low points. Okay, it's uptrending. High point, high point, high point up. Low point, low point, low point higher. Now, if this low point drops lower than this low point over here on these little peaks and valleys, if this valley drops below these valleys, and then you see it goes up to a lower high point as it continues down, you start to see a downtrend with high points getting lower. Then you say, okay, I see a small reversal. The momentum has at least slowed if that happens. And that's the value of zooming in on 1 minute candles. Then you could say, okay, now I'll take a market sell and I'll put my stop loss above Friday's close, which is where the gap started, right? Above Friday's close. Here's the gap again from Friday's close down to here. So you might put your stop loss up somewhere above Friday's close, which I see a spot that makes sense, somewhere up here above this high point here. So if it breaks through Friday's close, it very well might reverse when it hits this high point here. So if you took a sell now, hoping it would drop at this first resistance level, the gap, the close price, the beginning of the gap from this morning, if it drops from there, great, you took your market sell. Your stop loss affords you that if it breaks this resistance, you still might be right if it doesn't break this resistance, and then your stop loss is up here. And your potential profit certainly could be a lot larger, okay? Could be a lot larger than what you're risking to get above 1, 2 resistance levels before you give up on the move. I tend to like to have 2 levels before I give up on a move. That helps eliminate false breakthroughs some. Type okay if you're with me on that. If you have any questions, technically speaking, it's a great setup. It's right at the top of the gap right now. You don't have to risk much for this type of move. And many, many times, after a gap fills itself like it just did, many times then it will retrace back. Okay, not always, which is why you don't put your whole life savings on one move, right? And you limit your loss with some type of risk management, maybe, as I'm suggesting, a stop loss above 1, 2 resistance levels, and then you put the trade size that makes sense. And by the way, you could put your stop loss just above the 1 resistance level if you want to risk less distance. That's okay too. Every trader has his preference. Okay, Zolani, some will just see that resistance level and trade before the reversal. Some like to wait and see if it's starting to reverse. Remember, I was suggesting you, here's the 1 minute candles. It's looking like it's respecting the resistance for the time being. I think it might test it some more before, if it's going to reverse back down, I think it might test it a little bit more. But if you start to see that these high points that we're getting higher, 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 if you start to see the high points are getting lower, lower, and the low points are getting lower, lower, that's a reversal, okay? Right now, we're using time frames all the way up to 1 day, Albert, to see the bigger picture, 4 hours, 1 hour, okay, to see the gap. And we're using 1 minute even to zero in on our exact entry point. We drew the resistance level using 1 hour candles to identify the resistance that was back here in time. And now we're using 1 minute candles to try and spot a reversal. It's really trying to reverse, you can see that. I think with the amount of fear that's on the market could likely give in. I think that resistance level is strong, and it might be worth a shot to risk a little bit to put your stop loss up here, to take a shot that this movement could respect this resistance area here and give in to the fear that's been on the market all day. Okay, it's been mixed news, and so far things have been rising. It's possible you could get a reversal, but no guarantee, right? Yeah, we can take a look at oil. Now, what kind of pending order could you have? Just in case, what if there's breaking news? US-China reached deal. Tension eases. What if an article came out like that 5 minutes from now? What do you think would happen to this resistance level and this resistance level on the S&P 500? if some positive breaking news between US and China trade negotiations came out, probably these resistance levels would get left in the dust and you'd get a big breakthrough candle. Okay, what kind of pending order, besides putting your stop loss above these resistance levels up here, in case that happens, you get out with a small risk, you also could put a pending order up here to buy if it breaks through these resistance levels. What kind of pending order would buy from up here? If it breaks through, hits your stop loss on your sell, the same reason you got out of your sell is the same reason you might get in on the buy. A buy stop would. Vinod, good. Buy limit buys from a lower point, Charles. Buy stop buys from a higher point. So if you're programming a pending order on the MT4 platform, you go to pending order and you can say buy stop. You'd put the at price higher than it is now, above the resistance. So in that effect, you're backing yourself up. If you did a market sell, okay, great. I think it won't break those two resistance levels. Certainly we could be wrong, right? We're taking a limited risk. And if it does break through, you could have a buy stop, get in the opposite direction. Okay, this type of maneuvering is where I've seen the most success with traders. Not getting tied in or locked in that you have to be right on your first move. And then you keep throwing money at it to try and hold on to the position, no matter how far it goes the wrong way. Okay, this is where I've seen people really get themselves into trouble. Using a strategy where you don't have to be right, you just have to be smart, many times works better. Okay, and so at the same time, you're expecting this resistance level, or at least the backup resistance, to hold and maybe see a reversal back down. You back yourself up with a stop loss above those resistance levels and even a pending buy stop to go with the opposite direction. Okay, very useful strategies that really can help out. All right, so crude oil, let's look at it. Right, why is there so much resistance on crude oil up here? We're looking at 1 hour candles. Okay, this goes back to Friday. Resistance, resistance. We looked at this on Friday. If we look at the 1 day candles, look at this gap. Okay, it's not a coincidence that this resistance started to form near this gap. Okay, resistance, it's edging higher and higher, trying to break this resistance. And we pointed out last week on Friday, the top of this wick, okay? The gap, it already broke into the gap because technically the gap was here. But we talked about being patient and seeing if it's really going to break in. You might wait until it breaks above this wick right here that tested the gap and went back down weeks ago, okay? This gap here was when oil first started its big crash. That was when OPEC said to Russia, oh yeah, you won't cut production, so we'll up our production, even during a time of an oil glut, a surplus of oil. That was back when this crash happened. It was over the weekend that news was coming in. OPEC was going to up production during the time of an oil glut, and that they were in a price war with Russia over it, and boom, oil dropped. What is that? Almost $10 a barrel. Okay, even more over the weekend. Huge gap. So what happens if it breaks through this resistance on the top of this wick? And we looked at that on Friday and said that might be the decision spot. If it breaks above that, say to this price level here, it could run to the top of the gap. Okay, no guarantee, but it certainly would have to have momentum to break above that wick, and that momentum wouldn't reach resistance on the chart until right there. So even if you get in and you wait to get in at 37, the line I just drew is 36.93 to get above that wick. So maybe 36.9, 36.95, 37. Even if you waited till 37, look at that. There isn't any resistance on this chart that we're looking at until 41.25. That's being patient and still having over $4 rise before you get to the next resistance level. So that's waiting for confirmation of a breakthrough and an uptrend into this gap, clearing the last resistance right there, and you still have $4 per barrel potential rise before it reaches the next resistance level. Imagine a one lot position. That's 1,000 barrels, right? A $4 rise per barrel, you just made $4,000. How much would you have to risk? You don't have to risk much. Once it breaks above this wick, your stop loss should just maybe be back into that wick somewhere. Or if you're being more patient, below this open price on the gap right here. So somewhere down here might make sense. That's up to each individual trader. How much do you want to risk to your stop loss? What distance do you want it to be away? If you have your stop loss too close, you could get a little pullback before it keeps going and get yourself out of the trade too early maybe. But you could always re-enter then. Someone who has their stop loss close is risking less and could re-enter then 2 or 3 times and still only risk a little bit until it makes its true run. But this is a nice potential setup. A pending order up here, which would be a buy stop above clearing this last resistance with still a lot of room to run to the next resistance level. So even if you put your stop loss down below my second line here on an entry at this line, you have what, 2 to 3 times potential profit compared to what you'd be risking back down here. And it's a pure technical strategy. What did we just see happen to the gap today? Once it got going into that gap, it refilled it completely. The same thing could happen here. Okay? Any questions on that, or type okay if you're with me. And by the way, this is the power of looking at both the small candles and the larger candles. Okay? Taking that inside out look or outside in look, seeing the small movements and also seeing the bigger picture. We don't see this gap unless we're on one-day candles. Then, now that we saw that, you look at these 1 hour candles and you say, wow, look at that line I drew. That was from the one-day candles. This line was the gap back from weeks ago. That was the price it gapped down to. And look how textbook that reversal is. It hit that gap and boom, immediate resistance, resistance, resistance. This was an easy trade with a sell limit order to trade down off that resistance. Okay? It was very predictable there would be strong resistance there. And look what happened right on cue. The current support line, you see what happened here. It's right here. Okay? This was the old resistance, 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 resistance. Okay? Here's the breakthrough candle. Breakthrough, that was just today. Or no, actually this was Friday, this breakthrough. And then today it pulled back down and look, support, support. The old resistance here, resistance, 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 breakthrough candle becomes support, 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 and up it went. So it was predictable to trade down off that resistance up there. And it was predictable it might bounce off that support area there. Okay, so listen, it's textbook setup. With any positive news on any of the big news items out there, anything positive for the economy, you could see this resistance level broken and a potential run to fill this gap. Okay, and in the meantime, if fear hits the markets again, you could have a pending order to sell from this resistance multiple times. You can make money off that resistance until it doesn't work. And when it breaks through, fine. Have your stop loss at a spot that makes sense to you for the risk. We already see this resistance worked once, twice, 3 times with a nice big drop there. It's trying to test it again, and it very well could pull back down again. And all the while, you could still have your buy position up here at a spot that makes sense. If it breaks through that resistance enough, to ride this to potentially fill this gap. Okay, again, you don't have to have a personal preference up or down here. We're looking at technical strategies. You can set it up limited risk. You can decide you can trade in both directions if the technical movements hit the spot that you need it to hit to open that move. Okay, and in the end, you don't have to be right even 50% of the time to profit if you set it up in the ways that we're looking at here. Okay, very good questions. So what about, we're looking at the S&P 500 earlier, okay? And we were looking at 1 hour candles and seeing resistance here and resistance here. What about NASDAQ? Looks the same, doesn't it? Resistance level here that it just now is breaking through. And you've got a little higher resistance up here, okay? Resistance that it's really close to, okay? If we look at 1 day candles, there's no resistance here that's anything clear unless it gets up quite a bit higher to this high point here, okay? We're looking at 4 hour candles. If it breaks this resistance, right, there's no resistance until what we see on the 1 day candles. So you could have a buy stop up here. If it breaks through that last resistance level, just like on the S&P 500, you could have a buy stop ready to ride it to the next resistance level. And look at the difference. When we look at it on 1 day candles, the distance to your stop loss to get back below this resistance to put your stop loss down here on a pending buy stop up here, look at the distance to your potential profit before you get to the next resistance level. It's about 3 times more than you're risking down, 3 to 4 times more potential profit to the next resistance to get in on a buy stop here if it breaks through the current resistance that we see here. Okay, so that looks like you could trade on the reversal down, just like on the S&P 500. If you want to take a shot at this reversing with your stop loss up above the resistance, which we can identify on the 1 day candles, somewhere up here, 94.40 maybe. And then you'd have a buy stop up here potentially ready to ride to the next resistance level in case your sell position hit the stop loss. Okay, so I think there's potential for huge movement here. A big breakthrough or a big reversal. It's right on a decision point right now. It's on a major decision point right now. Okay, S&P 500, NASDAQ, many of the major indices are on major resistance levels right now, either going to break through or reverse. Isaac, if you're taking a market sell right now, then no, I wouldn't have a sell pending order. If you wait and the buy stop opens, then yes, you might put a sell pending order back below what then should be support, right? It depends if you're going to do a market move first. Almran, let's go ahead and look at your EURUSD. Okay, EURUSD uptrending strongly on the day, and on look at over the week how much the EURUSD has climbed. I see a major resistance level that it's reached right here. Okay, right there. You see resistance, 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 crash. All right. If we go 1 hour candles, look at that resistance level. I drew that on the 1 day candles way back over here. And look at where it came up, hit, and stopped. Tested it, and right back down. Tested it, and back down. Okay? This almost looks like what you'd call a head and shoulders formation, right? Shoulder, head, shoulder. Okay? So what's been happening with the USD is when there's fear on the markets, the US dollar has been strengthening against other currencies because many investors see the US dollar as safer during times of crisis than other currencies, along with the yen, which is a safe haven currency. So if you feel like the fear that's been showing on the volatility index all day might break at some point today, if the bears take over, this could be a large reversal. Okay, it could be a large reversal. So I think this is a setup on the Euro USD that might be worth taking a shot. You certainly could be wrong, right? Could break through. But look at the setup here. I only have to risk from the current price to there to get above the resistance. Okay? To get above this, this, and this, the head and shoulders. To get above all of that, I only have to go up to here. And my potential profit, if this starts to drop, if we go back to, let's say, 4-hour candles, this could come down. The first major support level is somewhere down here. Okay, this was resistance, 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 and here's the big breakthrough candle. And then it climbed. Okay, so if this reverses, you could have a drop of, what's it at now? 111.32 all the way down to 110.29. We're talking 100 pips potential profit if you took a sell and it dropped to that support level down there. 100 pips potential profit compared to risking what, maybe 20 pips, 25 pips to get above all this resistance. Again, look at the risk reward and also look at the fundamental news. It's mixed news today. Is it really so positive that the euro should just keep climbing and climbing and climbing, and the USD, as somewhat of a safe haven lately, should just keep weakening because the news is so good right now? We saw all the articles. It's mixed news, right? The volatility index has still been up all day. That means fear is still there. So there's the potential here for a strong reversal. Doesn't mean it has to happen, but I think the fundamentals and the technicals line up that it might be worth taking a shot. Now, in the end, that's up to you. I'm certainly not here to tell you what to buy and sell on or what direction to go. This is not financial advisement, but with the picture painted here, with the technical analysis, the potential risk to make certain moves, and what the fundamental news looks like, it could make sense to you. Stop loss up here, limited risk, potential profit much bigger to this support level down here, and you could take a shot at it. You know, trading isn't about guaranteed profits. It's about potential and managing risk and hopefully coming out on top after 3 or 4 moves each day or however many trades you take. It's not about being right every time. So this looks like a really nice potential setup, technically speaking, and also fundamentally. If we go to 1-day candles, if it breaks this resistance, you certainly could have a buy stop up here. If it breaks this resistance level here on the 1-day candles, gets above this second line I drew, which might be your stop loss line, right? If you sell, if it gets above that line, you could have a buy stop ready to go up here because it would take some major momentum for the euro to get above that line. Okay, and in which case your stop loss could be a limited distance, just back down. And by the way, not everybody uses stop losses. You could use a hedge trade. You could go without a stop loss. There are lots of different ways to manage things. You also could use the protection feature, AvaProtect. Remember, with all of these FX pairings and with gold and silver, you don't have to put a stop loss at all. You can just pay the small premium, and it doesn't matter how far it goes the wrong way. You could protect it for 1 day, 2 days, 3 days, and be as patient as you want, waiting for it to maybe reverse or break through further. Okay, so the AvaProtect feature can really work well with these types of reversal points because you probably think within at least a day or 2, 3 days, if you have that kind of coverage on the trade with AvaProtect, that it should make its big move by then, you might think. So you could be really patient with the move with the AvaProtect feature on your positions. Stephen, a hedge trade is a trade in the opposite direction to cover potential risk. So instead of, let me give an example of a hedge. So if I took a sell right now, instead of putting a stop loss up at this second line, I could just have a buy stop ready to go for the same size as the sell I just took. So let me walk you through. If I did Euro USD, I don't know, one lot, and I sell. Okay, I'm in on EURUSD, but now I'm unprotected. I didn't put a stop loss. But you know what? That might be by choice. I might say if the movement gets to 111.59, then I'll have a buy stop ready to go. So I go like this. This is my hedge trade now. Pending order, buy stop, buys from a higher point, 111.59. Buy stop for the same trade size, and I'll put a stop loss on my buy stop. If it triggers and then comes back down, I'll get out of the buy stop if it breaks back into a downtrend. So if it comes back down to 111.40, I'll close the hedge position, because in theory, I'm only putting the hedge to protect the move that I believe in more. And I'm just saying hypothetically, if I believe in the sell position more over the next however many days, then I would put the stop loss on my hedge position, expecting that if it triggers, it's more likely to come back down. And then I'll be staying with my sell position. So then I place that buy stop order. Okay, so if this movement reverses and comes up and hits this green line up here, this is the entry point on my buy stop. It means it broke the resistance, and now I either probably wanted to have a stop loss on my sell, or in lieu of a stop loss, I've got a buy stop. Now, if this went up and triggered my buy position, no matter how high it climbed, I'm breaking even, because I'm same size buy as a sell. So I can be patient and wait and wait and wait. The only risk is the overnight interest at that point. And then once it comes back down, if it came back down and hit the stop loss on that buy position, now I'm profiting again on the drop. And at that point, I could put a stop loss back up with the sell position if the buy stop triggered and then came down and closed itself. Type OK if you're with me on that hedging concept. It allows you to be patient without having to use a stop loss, and to cover your risk as patient as you want to be. Okay. Now, in lieu of a stop loss or a hedge trade, you could just use AvaProtect, because essentially it works out the same way. You can cover yourself for X number of days in the wrong direction if you want, and if the coverage period ends, it'll add back the negative. And it's kind of the same thing as having a hedge trade, because if you closed your hedge trade when the sell position went the wrong way, you're taking a profit on the hedge, and then it could come back down, and you still have the sell open. And in that case, if we go to 1 day candles, let's say, if the buy stop opened, you might take profit on the hedge trade at the next resistance level, maybe here, right? If it breaks through, triggers the buy stop, if it hits the next resistance level, you could have a take profit programmed on the buy stop to take profit here. Then if it even drops halfway back down on the trade set, you're in overall profit. Even though the sell is still negative, you made all this profit on the hedge on the way up. If it even comes halfway back down and you close the sell, you'd be in overall profit. Okay, one more time with the hedge. I have some people asking again. So as you can see, I took a market sell on the Euro USD. And let's say that in the bigger picture, I believe it should pull back down to this support level. But I also acknowledge in the short term, it could go the wrong way. It could go up. And instead of having a stop loss here, let me back up. What happens if in the short term, it goes up and hits your stop loss and then drops? What happens? Do you profit? No, obviously. You're out and you miss it. What if that happens while you're sleeping? Goes up, hits your stop loss. You don't have time to reopen when you see that it's coming back down. You wake up in the morning and you say, oh, look, the movement came all the way down to the support level. You look in your closed positions and you say, oh, no, I wasn't in on the drop. What happened? You say, oh, it spiked up and hit my stop loss, then it dropped. It happens, right? How do you avoid that? Well, one way is to have a hedge position up here instead of a stop loss. When it breaks through the resistance, it opens the buy position and starts climbing, you're covered. Okay, your buy position is the same size as your sell, so you're breaking even if it keeps going the wrong way. If it comes back down and hits the stop loss on your buy position on that hedge trade, now you're still profiting when it drops on the sell. It never had to close. Okay, that's the idea. Once that hedge position closes though, if it came back down and closed the hedge, you better back that up with some other kind of risk management. Okay? Unless you don't want to risk manage it after that, which you probably would. Okay? That's the idea of the hedge. All right, so let's take a look at gold. That was a request as well, and then we'll call it quits for the night because we've been going for an hour already, believe it or not. So 1 or 4 hour candles, we see resistance here. That wasn't hard to see coming. We see it pushed down off that resistance. If we go to 1 hour candles, you can see it. Resistance, resistance, resistance. It might not be done testing the resistance, but certainly it's been testing it. And so what do I see on gold? Kind of a mixed bag. It gapped up today when the indices gapped down. It refilled the gap down when the indices refilled the gap up. So it's more of a traditional movement with gold today in terms of going the opposite direction of the equities. Lately with the pandemic, that hasn't been so true. But today we can see when the equities gapped down and dropped, meaning fear was up, gold went up. And when the equities recovered back up, gold pulled back down. It's usually the way it goes in a normal market, as with gold being a safe haven. Typically, it tends to go down when the markets are going up and up when the markets are dropping. So if you're banking today that you think there'll be a reversal on the market eventually, that there'll be a bit of a sell-off on the stocks and the indices, then maybe you're banking that gold as a safe haven could push back up towards this resistance. Okay, that's something that easily could happen today. Honestly, the technical setup there doesn't look so opportunistic. It doesn't look like a great entry point. It's not right up at the resistance. It's not down here. Here's a support level down here. It's not down at this support level, support, support. And by the way, this was easily predictable earlier today. To buy off this support level here, look, resistance, resistance, breakthrough, support, support, gapped up, pulled back down, and look where it stopped when it pulled back down, exactly on that support, and bounced back up. So this is where I was saying earlier when we first started the webinar that we were going to look at fundamental news, but purely technical traders don't even need to look at the fundamental news. And here's an example. You don't have to know why gold pulled back down or why it bounced back up. If you were simply buying off of this support level, resistance, resistance, broken support becomes support, support, it comes back down towards the support, a buy limit pending order would have paid really nice up off that support level. Okay, right now, if I have some folks asking buy or sell, buy or sell on gold, and my answer is yes, buy or sell. I don't know for sure, right? And the technical entry point doesn't look opportunistic to me. Okay, it's halfway between resistance and support. One thing you can see is it's returned to the open price on the gap. You see here, there's a gap up. Here's the open price. It spiked down and back up. So it's right at that gap price. So if you're scalping, because it's at this level right here, the bottom of this green candle where the market opened, you might buy, have a short stop loss just below that support, just below that gap, back into the gap here. And so you're risking very little, and you could take a profit at the first resistance level here. So I'm certainly not telling you to buy right now, right? But a scalper might take a buy right now with a small risk here, a market buy right now, stop loss just below there, and a take profit at the first resistance. Okay, that could be a nice little move. Small risk, Obviously, no guarantees, but technically speaking, that's a nice little support level for a scalp attempt. By scalp, I mean in and out quick. Take profit right up here, stop loss right down here, small risk, 3 to 4 times more profit potential with a technical setup that makes some sense. Yeah, the S&P 500's in profit on the sell. I think we saw that potentially coming. Okay, let's get rid of my EURUSD, which isn't something I was really suggesting. Someone wanted to look at that, but really you don't need me to suggest anything because you should be making your moves with what you think. Now this could be a temporary pullback, right? But a scalper is already out. Okay, a scalper's already out. That's enough drop to make a nice profit with a sizable trade. And how did we think it would drop? Right off the resistance level that we drew from the larger candles. Okay, if you're more patient, you could be waiting for this to drop through the rest of the evening, potentially. Okay, could be a very nice reversal. Okay, so any last questions before we end things? Amran, there are a lot of resources out there. I think keeping things as simple as possible makes sense. So, just keep coming to the webinars, keep practicing, perfect with the knowledge that you might be picking up in the webinars, make it your own. Again, it shouldn't be my strategies, it should be your strategies. And you can easily predict reversals like this, no problem. You can predict those easily with a bit of practice. Okay, everybody, thank you for joining. I think some of these movements might sustain for a while, and there's huge potential here through the rest of the evening. So even if you're scalping, I think you could catch some profits, even in the short term. All right, thanks, everybody. Bye for now.